Hello and welcome back to the channel. In this series, you're going to see 25 days of trade analysis. I am calling it 25 days of Tradesmas. In this Tradesmas series, if you are going to be watching it, I highly suggest that you take the opportunity to be participating in the giveaway. I would love to give back to you guys in the YouTube world who have supported me and followed me. I am always very interactive in the trading floor community, but I know there's a ton of you who have followed me for a while who aren't in there, and I want to be able to give back to YouTube as well. So from the bottom of my heart, thank you very much for all of your guys' support here on my YouTube channel, and I am wishing you all the warmest of holidays, whatever holiday it is that you celebrate. I personally celebrate Christmas, so therefore I am doing the 25 days of Tradesmas. But whatever your holiday season is, I wish you and your family and loved ones a very warm and happy holiday season. With that being said, I am doing the giveaway here on my channel. So for every day that I do one of the Tradesmas videos, if you do any sort of interaction, if you like, comment, or subscribe, you will earn an entry to be able to qualify at the end on the 25th day to be part of the drawing that I am holding. I will draw a winner for the giveaway. I will announce the winner on the 26th of December. The prize will be to win a yearly subscription to the trading floor. So if you guys are interested in it, make sure that you are doing the likes, subscribe, and comments. Obviously, you cannot resubscribe over and over again, but don't worry. You will get 3 credit points towards that, but then every day following it, as long as you leave a like and you leave a comment, you'll get 2 additional entries for each of those. In addition to my giveaway, if you guys love giveaways, we are doing one on the Trading Floor YouTube channel as well. It's the same thing over there in order to enter as well, though it is interaction. So if you like, comment, and subscribe over there with that channel, you are going to be entered into a drawing at the end on the 25th as well. We will draw a name for somebody to win a $1,000 cash prize. You do have to have PayPal to accept this prize, so make sure that you can accept PayPal if you're going to go over there and enter into it. But I think that's a really nice prize. I think most people this time of year would love to have $1,000 extra. So make sure that you guys are also checking out the Tradesmas that we are doing on the trading floor. And there are lots of styles of trading happening over there on their Tradesmas. You will see all of our live streamers and our staff submitting videos. So if breakout trading isn't really your thing, or maybe my style isn't your thing, no worries. Go check out the Trading Floor's YouTube and make sure you are subscribing, and commenting for an opportunity to win $1,000 cash prize at the end. Okay guys, let's get into the video, and happy holidays. Hello and welcome to day 18 of Tradesmas. In today's video, we're going to go over one trade, but you're seeing 2 on the chart. But this is a little bit of a to be continued as far as this is what you will see tomorrow as well, because I'm going to go over what I do when I say I'm stacking a trade in tomorrow's video. So if you guys are interested in learning a little bit more about that and my rationale behind it, a little bit more than just the short that I explained stacking in, but I will link that above in the right-hand corner for you guys too. But if you want to know a little bit more about that, check out tomorrow's video. For today though, I want to just explain to you guys the analysis, and then in tomorrow's video, I will explain to you the rationale behind what stacking is. Okay, so let's get into why I even entered into this trade. So we're going to be focusing on what is marked up here for trade 1. Tomorrow, we'll talk about trade 2. But the entry will be the same for both of them, so just heads up there. But you'll have the entries the same for both of them. The reason for entering is the same, but the idea of the risk managing them is a little bit different, and we'll get into that tomorrow. So let's just focus on trade 1 for today. So trade 1 is actually here. So this is what you're seeing on the 12th. Both of these trades are from the 12th, and trade 1 was a profit of 1.5 R. So $1,518.80. So that is what we're seeing here with trade 1. As far as the rationale for getting into it, let's talk about this trade. So if you guys have watched previous videos, you know by now that I was trading NASDAQ pretty consistently for August, September, and October. I already knew that since August that NASDAQ overall on the higher time frames, overall stronger trend was that it was bearish. So keeping that in mind when we are looking at this, because I am on the 5-minute time frame, I wasn't looking for buys. If you guys saw yesterday's video, you already know I made that mistake. I was just waiting for this retracement to finish and to have the change of character in the market that I was looking for. So what I mean by that is having this change in market structure. where we are no longer making new higher highs. We stopped making a new higher high here and started making a new low. Then we make a higher low, a lower low, a higher low. And that's when I was intrigued to potentially get in at this point, because this was all happening at a key level of price action that I knew was a zone that I had marked up to the left. So that was happening, and I was interested in getting back into the market for a sell because, like I said, I already had the bearish bias. I was just waiting for the change in character for the market to flip and start trending and creating market structure to the bearish side. So I did wait a little bit longer. There probably were like better entries. Obviously, you could have gotten in off of this rejection or up here. But for me, using this with price action, I wasn't ready to get in. I wanted to see like market structure being formed. And typically I do like to see at least like 2 or 3 levels be formed before I will actually get in. I also do like to see like a break into another zone of some sort. So this is the zone that like mentally in my head I was kind of working within. And you know, it honestly probably could be a little bit smaller, maybe even here, or a little bit larger. But that's kind of the area I was working in my head as far as where the market was. But I didn't mark it up on here as a full-on zone just because more than anything, what I liked was that there was a key level that I knew there was an area of resistance and that there had been market change of character happening in the market, new market structure being formed at that level. I knew where it was a stronger trend, and I also knew that I wanted to get in potentially. So I was just waiting for the sellers to take control over again. So that happens here, and that's what you're seeing. So you guys can get a little bit of a better idea of what this looks like looking at trade 1. When I entered into it, I had this strong bearish candle that printed here. I did enter in right after that candle. And for my stop loss, I didn't go at this level here. I did go up here, and this is pretty typical if you guys have been watching my videos. When I'm working with mid zones, I really don't like to keep my stop loss too tight unless I've had a strong retest, and at this point I had no retest of it yet. That actually doesn't come until here, and stuff like this is why if you haven't seen your retest of your mid zone, you really should just keep it at the top of your bigger zone that you're trading within. So in this case, I kept it at the top of my zone. And then for my take profit, I did target this level over here, and I just kind of went for the middle area of it. I didn't really have any idea where it was really going to go. It was just, I wasn't sure. I didn't want to go too small on it because I did know that I was trading with the stronger overall trend, but at the same time, I didn't want to overshoot it because I knew I was stacking. And we'll find out more about that tomorrow and what that means. But when I am stacking, you know, I am looking to take 2 entries at the same area. So entering twice around this price point, and with the idea of that one trade would be pretty normal, shorter trade, and one would be more of a hold. And I didn't need to overextend this take profit because I knew I was stacking, like I said, but I didn't want to like jip my trade either and not have a safe risk to reward situation. So I went for this middle area here, and that's what you guys are seeing. I did do pretty close to like a 1.5 R, which is pretty standard for me if I'm kind of doing this stacking type of mentality. I like to take like the 1500 type of reward because that way, if I do lose this one and I won this one, because this is a more probable trade to get because it's a smaller take profit. If I was to win this one and get the 1500, if I lost this one, hypothetically risking 1% roughly on my account, I would only lose $1,000, which means between the 2 trades, if I won one, lost one, I would still be in profit $500, which for me is good. If I can make $500 for a day, whether the trades played out great or not, I'm happy with that. So that's my logic behind that. But anyhow, that was this trade. That's the entry for it. There really wasn't anything too fancy about this trade other than that I was just waiting for market structure to change at a key level. And that's what I saw here. So that's, pretty much what I saw here. It probably looks more complicated than it really was. It wasn't that exciting of a trade. It's a pretty standard trade for my type of trading. So that's what I was doing here. And that's it for this. Tomorrow, let's get into trade 2. I will explain to you guys a little bit more about the stacking. But that is it for today, you guys. And I will see you in tomorrow's video.